Good morning, everybody. Today I'm going to make an update on the trend divergence between Europe and emerging markets against the US. So we'll see that there is something new happening in these markets. Then after that, I will make an update on the euro dollar, which successfully tested an important support zone at 115. And we will end with a chart of the Bitcoin, which is resuming its short-term downtrend and seems ready to retest 6,000, which is a key support level. So first of all, same chart than last week. This is a chart showing the divergence, the trend divergence between emerging markets, which remains very weak, and the S&P, which remains close to all-time highs, but starting a significant pullback this week. First of all, if we look at the MSCI Emerging Market Index, renewed weakness this week, back to back below Fibonacci support at 42.30. So we are starting to see renewed weakness after an unconvincing technical bounce, suggesting that the MSCI emerging market remains very weak, with a risk of further weakness, additional weakness to 40, which is the next important charty support, and also we have next Fibonacci support just below at 39.30. So persistent weakness on emerging market. Europe is also quite weak. Renewed weakness, as you may remember last week, highlighted that Euro Stoxx was in a symmetrical triangle pattern without any clear trend on Euro Stoxx 60, 600. Then we had a breakdown on this index this week, highlighting renewed weakness, renewed selling pressure, and possibly lower levels and a retest of March lows. So the technical outlook is obviously deteriorating according to this chartist pattern. The only good news, if I would say, is on oversold indicators. As you see here, this is one of my trading tools showing oversold conditions on a daily basis. First time the Euro Stoxx is becoming oversold on a daily basis since February. This is reassuring, I would say, but I wouldn't call for the start of a significant rally. But if you're waiting for a significant pullback to slightly increase exposure on the market, on European markets, this could be a good timing to start doing so. So not a strong buy signal, but an indication that the index is becoming a bit oversold here. The funny thing is that as European stock markets are becoming oversold, if we look at the S&P 500, a week ago the S&P 500 was becoming overbought for the first time since January. This is a bit strange, so we are starting to see European oversold markets, oversold European markets, and overbought US stock markets. So it shows that we are starting to see a pullback, a bearish reaction to this overbought signal on the S&P 500, possibly marking the start of a short-term correction. But as you can see, it's too early to call for a major trend reversal, but at least we are starting to see profit taking on this overbought condition. If we make an update on the NYSE FANG index, we continue to see weakness on FANGs. So FANG stocks are becoming out of fashion. The index is testing a critical support here and may continue to decline, retest its 200-day moving average, and possibly break down. We also see that the relative performance versus S&P 500 is weakening, with also possibly further underperformance against the S&P. So a mixed message from the FANGs, and probably not the place to be right now. The new signal this week is coming from the Nasdaq 100. So yesterday's session was quite bearish, I would say, from a chartist point of view, because the Nasdaq 100 moved back below support at 7,500 As you can see, it was the breakout level, the level broken in late August. As a reminder, we had a breakout above the upper part of a triangle formation. So right now we are back into the trading range, back below the breakout level. This reminds me what happened in March. As you can see here, during this period we had a false breakout, then back into the trading range and start of a pullback. This is possible. I mean, we may be starting a similar correction, so this is at least something to keep an eye on, and possibly start of a deeper setback on the Nasdaq 100. So once again, probably not a good place to be right now. If we now switch to currencies with an update on the scenario I discussed last week on Eurodollar. As I remember, I highlighted that Eurodollar probably hit an important support level at 113 in mid-August, and the fact that the Eurodollar bounced off an important support at 115 this week rather confirmed this view, and I think it was a buying opportunity. I wrote that in my daily mail a few days ago, and I think that we are likely to see further rise in maybe in the next month or two, back to 118, maybe 119.50. So I think this technical bounce of the Eurodollar is going to continue. Last chart I wanted to show you is on the Bitcoin. I haven't talked about the Bitcoin since a long time, but I think it's quite interesting what happened this week. The Bitcoin made a very strong recovery between late August and early September, and resumed its downtrend over the last couple of days. This is a very strong sell-off. And I think it shows that there is a high probability of retesting a major support at 6,000 and maybe even drop below this support zone this time. So keep an eye on the Bitcoin in coming days and be ready to see a breakdown below 6,000. Have a very nice trading day and a great weekend. Thank you.